Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, September 16th. It's 6:28 a.m. as I'm starting the video, and as always, don't forget to run the player at 1.25x. That'll make you run through the content a lot quicker, and I think you'll be happy with it. So, had a nice bounce yesterday. Let's take a look at the charts. 10-year yields got a little pop. Back up above 1.3%. That makes me a lot more comfortable than being down, heading lower. Maybe a psychological level there for me and the market as a whole, probably. Remember our themes or our regimes below 1.3% is going to favor tech, bubble, high valuation stocks, ARC stocks, stuff like that. Between 1.3 and 1.4%, I think it's where both regimes can operate, and then above 1.4%, I think that becomes a headwind for tech, especially if it's a rapid advance, and then favoring cyclicals, banks, reopening, all that kind of stuff. Would tend to indicate an accelerating economy. The Fed next week will probably have a little something to do with rates going forward, so we'll have to see what they say. But in general, it's above 1.4, in the middle, between 1.4 and 1.3, and then down below. In my haste to get started, I just realized I forgot to go over futures and the macro, so let's do that real quick. A lot of red on the screen, but not too bad, at least as far as the equities go. I see down about 0.25%, just toggling near the zero line. Nat gas and copper down 2%. Those have been really volatile lately. Oil's pretty much flat. The Nikkei's down 0.75% and gold's down 0.8%. Hasn't been doing much. Got a lot of stuff on a macro front today. We've got jobless claims. We've got Philly Fed manufacturing. We've got retail sales. That'll be closely watched. Business inventories, and then nat gas inventories at 10:30. And then tomorrow we've got two big things going on. We've got quadruple witching, where all the September options, quarterly options, and all that kind of stuff roll off tomorrow. And then at I believe it's 10 a.m. we've got University of Michigan sentiment, which will be closely watched as well. So we got a lot on the board. And then of course next week we've got the FOMC. So lot of macro drivers, and I'll also make mention, because I didn't yesterday, that Evergrande property management company in China has their bonds have stopped trading. They announced they're not going to be paying any interest. I didn't see any kind of big, contagion or fallout so far, but I think it's a story worth watching. And also, they came back in and hammered the Macau gaming companies, Wynn, Las Vegas Sands, Melco, MGM. That's a good reason why. On the remember we had the drop. Let's see. Yesterday was Wednesday. On Tuesday we had the big drop in those gaming stocks because the regulator was saying, we really like to see more local ownership and have you guys spend or put more effort in on the non-gaming activities. So of course, gaming is the business. So if you're focusing on non-gaming activities, what are you really there to do? So I think those may be under a cloud for a while that all gets sorted out. And I saw a lot of big money option trades on Tuesday, stepping in with call buying, out in time, but still now they're, 5, 8, 10% below their entry just one day before. So when you see a big drop like that, that 3-day rule is often helpful. Wait for things to pan out, let price find its spot. And then if you want to say, okay, this is overdone, I'm going to go out 2 years or a year and, buy some leap options or something like that, I'm going to take a shot at this, then okay, you're probably going to be a lot safer than, that first day, and then you got 2 more days of follow-up selling. So just something to file away if you're not familiar with that. So, okay, we took a look at yields. Moving on to TLT, we were focused on 152 yesterday. Of course, with the yield rise, TLT is going to fall. And now I think we've got a pivot point here at 149.50. If yields rise again, that'll drop down below, and then we'll be back down below this main level here. You can see we've established a range of value for TLT from 152 down to, call it, 146, where a lot of trading has taken place since July. So I think to get any kind of bold move, it would be a breakout above 152 or a breakdown below 146. Then it would be game on for rising rates. Once you lost the 200, coming down here, that would by definition tell you rising rate environment, and that would be very helpful to the cyclical reopening bank trade, but tech not so much. So that's that. Interesting, yesterday, the VIX, remember we had 2 days where we popped up, Monday and Tuesday, or no, what was it? Friday and Monday, a pop-up near 21. Remember, 20 is our red flag territory. Anything above that opens the door to more volatility, and probably up to 25. They've suppressed that, and then yesterday they brought it all the way down to our 18. So today, I think 18 is a nice pivot point for us. Why? Well, if they push it below 18, we're back in kind of the green zone for equities to rise. If you see, 1790 and then 1775 and then 1750, you're probably going to be seeing green bars on the screen. And of course, the other thing is true as well. If you start seeing, 1825, 1850, 19, you probably got red on the screen, and that would keep us in this cautionary zone between 18 and 20. And I think right now, was yesterday a dead cat bounce, or was yesterday, oh, well, just, another garden variety 2% sell-off of all-time highs, and then the dip buyers come in, and that's the end of that. I think, it's always difficult to gauge whether an initial bounce is the real deal, meaning are we going to get follow through from here, or was it just a little relief rally, dead cat bounce, and then we roll over and head lower from there to resume the downtrend? What I would like to see today, and we'll get into the charts here in a minute, but obviously some follow through. If we have a red day today, then I think the jury's still out, because we do have, the OPEX tomorrow and then the FOMC next week. So those are going to be big catalysts. And I would have liked to seen yesterday what we had talked about in the morning, and that is kind of a panic whoosh to kind of wash out some bullish sentiment and then rebuild from there. We didn't get that. I mean, it was nice to have a green day and all that, but we'll just have to see if that holds or not. And I think the next couple days will be relatively important. Here's our equal weight SPY that we keep track of, just as a gauge of what's going on under the surface. It's not cap weighted, it's all equal weighted. And you can see here that we were keying off the 50 EMA at 153.50. That held nicely, and we got a nice bounce off of that. Now today, we are just under the 8 and 21 day, 8 and 20 day here. So with any kind of a green bar today, we will have recaptured the 8 and 20 day exponential moving average. And remember our rules. Above the 8 and 20 day, it's a green light. Below the 8 and 20 day, but above the 50 day, is cautionary. And then below the 50 is definitely defensive. Nothing good happens under the 50. So once you lose the 50, then you're kind of on the wrong side of everything. But in this case, the 50 did its job, held, right down there, right down to support, and nice bounce. So those are the key levels going forward here. SPY, very much the same kind of look. We came right into our channel low, which did its job as support. Now we've bounced. We're right up into the 8 and 20 day. I think any kind of green day today would push this above the 8 and 20 day for sure. We're right there. There's the confluence there at 448. I think if we push above that today, that'll be a really, really good sign. We never did come down to test the 50 on SPY. You can see it right here at about 441.60. So if we were to somehow roll over, break this level, we've got 442.50, and then we've got the 50 as the last line of defense for a bounce. And then if we were to lose that, we've got 436 down here, which you can see there was a lot of responsive buyers at that level on the last time it was down at 436. So those are some upside and downside scenarios for you. Getting some granularity on the 2 hour. We came down and we spent quite a bit of time down here in this 444 area before we got the lift, and then we recaptured this 447 area, which was nice to see. You can see we've got a large volume over price bar right there, and we were able to move above it. This would have been a logical technical spot for price to stall and turn down, but it didn't. It plowed ahead. So I think that 447, 447.50 area is going to be important to hold for today. Now, what I've done here, as you look at your charts and as you watch your trading, we've got an emerging bull cross here in PPO. That's the first step. You see we've got a positive histogram bar here. So momentum is improving, still got a long ways to go to get up over the zero line. And here on RSI, we see we're still in the bearish regime below 50, but we're making a run at it right now. So if we get more positive days, what you would expect to see is momentum pick up towards the zero line, hopefully go above, get back into positive territory like we did back here, and then have RSI come up above 50 and break out above this downtrend resistance line. So an improving picture. And then here on the 30-minute chart, you can see that in the shorter time frames, we've already broken above our bullish bearish divide at the midpoint. So we're above 50, we're above 0. That's what you want to see. And also, there were some clues that a reversal had a good potential to work out, because at the lower low, notice that was made with higher momentum and higher RSI. So at this low, here, we had lows in momentum and lows in RSI. And then when we came up and came back down, so we were at a lower low on price, but we were at a higher low on PPO and RSI, and that's your bullish divergence line. Now, if you're actively trading SPY, you had some very good reference levels. Well, first of all, we had this level marked, so that's a plus. I mean, that's why you're watching the channel, to get these levels from me. And hopefully over time, the more and more times you see this, that the levels work, then you'll have more confidence in the levels, of course, right? But even if those levels weren't even there, you had, you had 4 bars that came down to this, 443.40 area. Hard to get down to the penny when you're dealing with a $400-something stock. But you had 4 candles that came right to the same spot and stopped on a dime. And, if you're charting that, live, if you're watching a 5-minute chart or whatever, you can mark that low, and then as subsequent bars print and you never go below it, you can clue yourself in and say, hey, that was, it looks like we got a durable bottom. And then you can get long against the low with your stop just below, and then you can enjoy the bounce. Other opportunities to get long would have been a breakout from the downtrend channel in here, a recapture of 445 in here. Those look like, very objective places to get long. Now what I've done is I've dropped in the fibs off of the most recent, swing high to swing low. And you can see here we're right at the 50% retracement, or the half back, as I like to call it. So if it's going to roll over, this would be a high probability location that it would do that, because we're coming off of a series of lower highs and lower lows. We've got a breakout, but we haven't got a higher high yet, right? I mean, we do here, but bigger picture, we got more work to do. So that's how you can use these Fibonacci retracement tools to look at the locations, and it's pretty uncanny how it works. When you get a fib retracement level that aligns with a lateral resistance level, that makes it even more important, because there's 2 layers of resistance there. You've got the Fibonacci bounce level, half back, and you've got the largest volume over price bar on the chart. So that's your highest resistance point on the chart. So at 448, that will be a really important level today to watch. If we break above, that'll be very positive. Doesn't mean there's not more work to do. We got the 618 retracement here at 449. That would be resistance. But if it rolls over here, then most likely coming back down towards 446 and probably most likely to come back down and revalidate this low, and that would give you a double bottom low to shoot for in the days ahead if that were to play out. Qs. We are just by a few pennies above all the moving averages. This 378 level, I think, is a good toggle point today. You can drop that back to 377.50 if you care to. We've got this rising wedge, which is a little bit of a precarious setup because it's steep. It's been mostly uncorrected, but as long as price stays above 378 and works up into this area, we buy more time. But if it were to roll over and drop out of this, then the other scenarios that we were looking at earlier in the week come into play. We've got yesterday's lows at 373.40 right here, and then we've got the 50 down below and some intermediate support levels. So that was the bounce came at a really nice time. Here's the 2-hour chart. You can see that we're trying to get back into this prior trading range. And remember, our technical analysis tenets, when you drop out of a range and then re-enter the range, if we were to have a green day today and push into the 379s, our natural target would be the far side of the box, the far side of the prior trading range. So getting a breakout here today or tomorrow would be important from that respect, that we're back in the old trading range with a technical target back up at the highs. But again, yesterday, as far as your trading goes, we marked a low. We had the level marked, stopped on a dime. We came up to the top, rejected, came right back down to the same location. So that's where you had your double bottom low to shoot against. And we had that one candle, I think that was right off the open, where we undercut it, but then they bought it right back up. That's always a bullish signal, false breakdown. And then the next candle, again, was right at the support level. So that was a great line to shoot against if you were trying to trade that, because you had all these candles probing, testing this 374.25 area, and it held each and every time. So here it is, just blown up. And what I've done is put on the measurement tool, which from the base of the double bottom to the peak of the double bottom was about 0.8%. And then how you find the target is extend that from the breakout level. And so I've penciled in a target of 380.50, and it's just coincidental that was another important line on the chart that we had already marked. So if we do in fact get the breakout today, then 380.50 will be a logical place to look for a target. Now IWM had a bounce as well. I think on IWM, I haven't even changed these since yesterday. If you're looking at the daily chart, I think you just look at 222 and then 224. If you got a breakout above 224, I think you definitely want to be long there and shoot for the top of the box. That would be, your A, B, C move. Here were the Fibonacci retracements. stopped right at the 50% level, which is the half back long that we just talked about in reverse for SPY. So we'll see. We'll see. And remember, this is, small caps, a lot of cyclicals, regional banks, stuff like that are in that index. So I think rising yields will help IWM a lot. Here's a downtrend line, and you can see here the gold EMA is our 50 EMA off the daily, and we just came up to tag it. So all things considered, got a $2 bounce. It's better than nothing, but it wasn't some kind of big impulsive move higher. So a lot of work to do on IWM. First order of business for the bulls is to take out this 50 and then move up to 224, which was a big line in the sand from before. And you can see resistance across the top, support here, and then once it failed, it has come up a couple times and failed there as well. So when it comes up here again, that would be a natural point for it to fail if it was gonna. If it breaks above, I think that would bode pretty well for IWM. Here it is on the 30-minute chart. I do have an intermediate level here at 223. So if you're trading that, on small time frames, I think there will be a little resistance here at 223. Before we get into FATMAN, we've had a lot of new members the last couple of weeks. I want to welcome you, and I really appreciate you being here, spending some time with me. I'd like to think that reviewing the video, taking some notes about key levels on the FATMAN names and the indexes will really help you in your trading to give you some objective levels to shoot against. And if you're enjoying the channel, please subscribe and hit the alarm bell. That way you'll be notified of the content. And also jump over to the show notes. There's a link there that'll take you to the registration page on the website. You can drop in your email. That way you'll officially join the team. We'd be glad to have you. You'll get an invite to our trading room, which we've had a lot of new people join. Pretty vibrant place lately, and a lot of sharp traders in there that are quite generous with their time and their setups. So I think if you're a young trader, a new trader, I think it would be very helpful. I learn something almost every day in there. So it's great to have the second, third, fourth set of eyeballs with new approaches, different setups. You just can't do it all. And when you get a nice setup from somebody, it's nice to have that. And you'll also get all my content sent to you via email. You won't have to go hunting for it. So on Facebook, and also back on YouTube, of course, longtime listeners, I appreciate you being here. And if there's a sector or a chart or special content that you want to see, please leave me a comment, and I'll do my best to work it into the program. I'd enjoy doing that for you. So back on Facebook, they had some bearish news yesterday, quick sell-off, but we had this line already established. This line was here yesterday, and so you had 3 candles, an hour and a half, where they could not take out the low, and that would have been a beautiful place to try your long against the low of the day, and you got a nice lift. You got the recapture of 373, and then we poked above 375. We hit the downtrend line. So today, this is your reactionary bounce. Whether it's for real or not is most likely going to be determined today. Can they break out above downtrend resistance and head higher? Or was this just a kickback rally to downtrend resistance where it fails and rolls back over? Now, if you're trying to actively trade that, how would you approach it? Well, if you got to push into 375 and it can't break out, you can be short against that level with a stop just above this downtrend line and look for a reversal, or wait for price to come back through 373. Losing a level from above is bearish, so you could get short at 373 and look for a move back down to the prior low, 368, and then you'd have that double bottom low set up again for a potential bounce back up. So that's why these levels are so important, because you recapture from below or you lose from above, and those are your buy and sell points for active traders. Apple, bounce back day, back into this little trading range. I think we've got a nice pivot point here at 149.50. If it can't break above, this would look like more or less a dead cat bounce. And if price came back down below 148.50, that's your, if you're trying to actively trade it, that's your short right there. And then you'd be looking for another test of the prior low. Tesla's been doing nice technical trading. We had this low at 720, which has been on the board forever. Got a nice bounce. Recaptured 740 from below. That was a buy. Came up to 755, which was the line that we had as resistance. Got rejected. Came back to 740. And then yesterday, the low held and back up to 755. So several $15 trades in there if you were actively using these levels to go long and short against. But behaving really well. I think if you get a breakout above 755, 760, then remember from our daily chart, we're looking for 770 and then 790. So that one's looking pretty productive. We had the dividend boost announcement, and I think it was if I'm not mistaken, a $60 billion buyback. And we got these over the last 2 days. We've had this run right back up to 305. I think this is setting up for a powerful move. Whether it happens or not, I don't know. Because look what we've got. We've carved out a big trading range between 294 and 305. So that's, what is that? $9 or $10, right? Yeah, $10 range more or less. So you get a breakout here into blue sky territory. If everything stabilizes and the FOMC is handled well, you want to get long above 305 with duration. And I would feel really good about that. I think all-time highs you got to buy. Breaking out of this consolidation, I think, is going to be powerful. And, if there was one name I was going to, hang my hat on from both a technical, fundamental type basis, I think it would be Microsoft with a longer duration play. And then, the beauty of it is, you know exactly where you're wrong. If it comes up here to 307 and then rolls over and comes back down below 305, you just get out. And and use that 305 as a hard toggle, because look at all the rejections here, right? So if you break out, that should be pretty powerful. It's been tested a bunch of times. So I really like Microsoft long above 305. Amazon, nice trade yesterday. A couple people in the trading room got it. We had said yesterday morning, if it lost 34.40, this was your first line of support, and that's where it stopped on a dime. Had 4 candles that could not take out that low, and then so your trade in that scenario is obviously long against the low of the day, and it never could take it out. And then you got a big, basically a $75, $80 run up here towards this 34.71. It went higher, then came back. So here's your pivot point, like 34.75. If it breaks above, look for 35.10 and then on up. And of course, if the market rolls over, this would be a logical spot for this to fail and then come back down. But that was a nice day trade for people that were following it yesterday. And same thing with Google, actually. We had this 28.40 marked. You had one candle that came down to our predefined level here at 28.25. I mean, that's a hard one to buy. I think the real location was 28.40. You had the bearish bar come down, make a touch. They bought it right back up. Then the next candle hovered right at 28.40. And so you had a lot of reactions here at 28.40 that in essence held, and then getting long against 28.40 with a stop just below worked out really, really well for you. Even at this point here, if you missed all of this stuff, this is a good example of moving back in to the prior trading range. Here at 28.60, the target becomes the top of the range, and that's exactly what happened. So there was some nice technical trading there in Google yesterday. Nice technical trading in Netflix as well, because we had this level marked at 575. A lot of candles there. You didn't get a lot out of it. I mean, you got to bounce into 584, but you never know what you're going to get, ahead of time. All you can say is 575 has held, and you want to get long against that level and see where the bounce goes. Of course, if you took that trade, you'd be disappointed that you only got, $8 out of it. But now price is in a position to where it's either going to roll over or it's going to break out from right here. So I think 584 is your pivot. And then semiconductors have acted nicely. We got support here at 72.50, got a bounce. I think if you break above 276 with semis, you want to get long. That's blue sky territory. And I've been relatively impressed with the semiconductor sector because there really wasn't a ton of corrective action in this group. And I think it's an important group within tech. So if semis are acting good, then I think it bodes well for the Qs, tech in general. And like I always say, all-time highs you got to buy. You will certainly have a line in the sand at 276 to shoot against going forward. And then AMD didn't really do anything yesterday. Came down below, recaptured 105.50. Depending on how it goes today, if you're watching it, you can get long against that level, or just say, you know what, I'm going to give up these $2 or $1.50 and say if it breaks out above 107, I want to get long and shoot for 109. And then depending on what your time frame is, you take out 109, that opens up 112 again. And then let's wrap up with Shake Shack. I just wanted to make a comment about it. I sent it out as a trade idea yesterday in the afternoon. When you're going through your charts, I think it's important, and I think you'd be well served if you run across a chart, even if it's not something you're particularly paying attention to, and you see these setups that kind of jump out at you. I mean, you don't have to know all the nuances of technical analysis to see that there's a line on the chart that looks important, where you broke out, you came back and back tested it, then you made a big run, you came right back to that level, it held, you had a run, it came back to that level, and then here we are again. So mark that not only on your chart, but set yourself an alarm in your platform, because it's either one, a great place to buy, or two, a great place to short. I mean, you can see how important this line is on the chart, and those are great inflection points to take note of and trade against, because at this point here, it's very simple. You either buy it or you're hoping for a breakdown to short it, because if it loses this line, I mean, it's going lower, right? Because support falls away and the market in general is probably falling apart. I mean, that would be a high probability short on a breakdown below 81 or 80, depending on when you wanted to get involved. But if the market holds together and gets more productive, then you can be long against that line. And even if this only bounces halfway, say instead of going up to 110, it goes up to 100 or it goes up to 95, you still got a really nice trade on your hands. Maybe it comes right up here to the 200 and fails. I mean, you still got a winner because your entry was so good and compelling at super key support. So when you're going through charts and you see these lines, set yourself an alarm in your platform, and it may not go off for a year, but when it does, it'll refocus you on that chart, and then you'll find yourself at a really nice trade location. So let's wrap it up there. Let's see if this bounce, we can get some follow through today, or if it just kind of bleeds on down again with OPEX and all those macro drivers that are in front of us. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.